Welcome to the 41st meeting of Junto Club. Today's meeting starts with discussing losing the forest and the trees. Now, this is a shoe-led meeting, so we're going financial for a lot of it. The focus of the episode is The Most Important Thing, a book by Howard Marks that gives some good tips for new investors. For any questions, comments, or if you'd like to rant on something important to you, email juntoclubpodcast@gmail.com. This is Junto Club.
Junto Club.
All right, so welcome to the 41st meeting of the Junto Club, where we are inspired by the original Junto Club founded by Benjamin Franklin around 200 years ago, and to discuss topics, I don't know, business, anything basically his friends want to talk about, philosophy, society issue, stuff like that, and then anyway, we're going to talk about actually the main topic for today is a book called The Most Important Thing. Basically, it's an investing book by Howard Marks. And anyways, I find it interesting. It basically line out what to focus on when you are making the investment decisions, basically. So yeah, anyway, however, before we start, we usually start with a quote. Today's quote is from Charlie Munger, the modern day Benjamin Franklin. And let's see. So today's quote is, quote, a majority of life's errors are caused by forgetting what one is really trying to do, end quote. Any thoughts?
Was that missing the forest for the trees? Same thing?
Yeah, I guess. Yeah.
No, I mean, I don't feel like this one needs any like deep insight to explain it, right? Like some of those Ben Franklin ones we have, it's pretty straightforward, you know. It's easy when you're getting like kind of bogged down into the details to kind of sort of slowly wander off of what you're really trying to do, trying to solve a problem. You do something, you get a new problem, you start attacking that, and you step back, you're like, we've kind of like, this doesn't really matter. It's not actually like no longer helping towards what we're, you know, working towards.
Okay.
I assume anyone who's like worked on like significant scale projects, I assume probably has had that happen to them. So,
okay, cool. I guess today's pretty straightforward, and we don't need to go into more detail about it. And
well, we can say, is it a majority of life's errors due to that? You know, if we're trying to get some controversy to make this more interesting, that seems like a very strong statement. Is it something that happens? Yes, a majority of life's errors. I'm going to say no. I disagree.
No, I think a lot of times other stuff like life decisions, I guess. Sometimes, for example, you're solving a problem, yes, forget about forest for the tree. But in other life decisions, sometimes you just like day by day, right? A lot of time you don't focus on us, right? Focus on what you're really trying to do. Sometimes you don't even know like what you really want, right?
Mm-hmm.
There's a interesting, recently I heard something called mimetic theory of life, something like that. Mimetic theory. Have you guys heard about it?
I have not.
Basically, majority of people I think one of the philosophers back in the day talking about a mimetic theory. Basically, a lot of people like want something because they usually like either they is what society like say, like you model after, you either color other people wants, right? So you mimic other people's desires, and basically like social influence, you know, stuff like getting rich, getting famous, and all this stuff. And then you might not be really what you want, right? Even though you think, I mean, it's good to have, right? Wealth is good to have, but it might not be what you really want. So yeah, so I think that's what kind of related maybe. Like you are even, yeah, I mean, it's higher level than like forgetting what you're trying to do is that don't know what you're trying to do, I guess.
Well, figuring out what you should be doing is difficult, but is that really fall under this? You know,
no,
sometimes
it's
just hard, you know, like figuring out what you should do to achieve your goal to even figuring out what your goal should be can be like a challenge, right? Like, I mean, how many people are like, looking for work that they find meaningful, that something more than that just can, provide enough so they can survive, but something that gives them some sort of meaning and purpose in life, or something they don't hate when they, go do every day, right? Most people don't, want work that they don't hate when they go to every day, but a lot of people struggle to find it. There's not just like something simple you can remember to be like, oh yeah, if I just remember this, I suddenly don't hate my job, right? It can be hard.
What about you guys? Have you guys figured out what you want?
I feel like I've been thinking about that more and more since finishing, because I mean, the PhD provides like a very good amount of trees, right? So at least so even if it's not like, even if you think about like your PhD and there isn't necessarily the perfect forest to provide you meaning, there's plenty of trees that can provide you like that day, like as we talked about, like, you can pursue the day-to-day problems very easily and keep banging your head against the wall. But like, I feel like when you finish, it maybe is harder. Like it forces you to take like a larger, like, I guess, try to view a larger scale, like, what do I want out of my life? So, I mean,
okay.
I guess you can jump into work and do sort of the same thing, but I mean.
So have you figured it out? What you want? Oh, you got some way there.
No, I mean, I think I have maybe more of an appreciation for like a well-rounded life, just like, something you can look back and say like, okay, like I contributed to something positive, like professionally, like, and maybe had like, some successes there, but also, that like I'm not dying alone and I'm not, I made I had a lot of different experience. Like, I guess you try to appreciate experience more. Like, okay, I'm glad I saw that, or I'm glad I did that. So.
I was going to say, related to your grad school thing, I think I had this conversation with my brother once a number of years ago, because like basically, he kind of finished all his schooling and stuff and he was just like in a job. And I think it hit him maybe for the first time. It wasn't something that I'd really thought about, that like at some point you get into like a job and you're like, well, if I don't do anything, like if I don't take an initiative, I could just like work here for 30 years until I retire and like wait to die. Right. Like, like you kind of hit that point when you're in grad school or even college or whatever, you have these like near term big goals that kind of, it's like a long term goal, right? It's not like short sighted, but like you very much like have your life planned around. So you're not thinking about like, oh, in general, what do I need to do with my life? You're just like, well, I just got to get to this finish line. And, and once you actually kind of complete all those finish lines and you're just sort of in the adult sort of coasting stage, it's like, a new reevaluation happens. Like, okay, now what?
Yeah, because the finish lines are more ambiguous, or death. Like, that's basically it.
So for people who are smarter and don't go to a PhD, they reach that point when they're like 23 instead of, exactly. 30. And they're like, oh, like now I'm done with school, making money, what next?
Yeah.
True. I don't reach that point until like 33, so 34. Anyway, so what about you, Matt? Did you figure out what you want?
I think I got it fairly well figured out, but I also, well, not from me, but my wife is still she's about to start a residency thing. So I feel like I still have a lot of like these like in a few years, big things that are happening that like we have to base a lot of our life around. That kind of gives a similar momentum of like, we just got to get through this. And then it's like the next, finally the clear stage of like, we're just coasting, right? So I don't feel like I've been able to hit that coasting yet.
That's good. That's good.
So maybe I'll, maybe that will happen and I'll be so old I'll start having like a midlife crisis or something, but we'll see.
You can't always get Porsche then.
It'll be a Tesla. Come on.
Oh, Tesla. No. You want Tesla actually?
Yeah. Well, first of all, I would like to live somewhere I don't need a car, but if I assume I do need a car, a high performance electric car would be very nice, which a Tesla seems to be one of the better around for that. But that's going to be a few years, so maybe, who knows, maybe Ford or something will have something competitive.
Okay. Speaking of Tesla, have you been tracking about Tesla recently?
I saw the supposed leaks where Bill Gates and Tesla were texting, or Elon were texting each other, not Tesla. And Elon's like, "Did you short Tesla 500 million?" And Bill's like, "Sorry." And I'm like, apparently there's someone from like the New York Times or something says it's like confirmed, but it's so surreal, right?
Yeah.
Just watching billionaires just like casually text about $500 million, like, stock option stuff. And I'm like, what the fuck? I don't know.
Yeah, yeah. Well, you're going to say something, Mike? I mean.
No, I just saw I mean I didn't hear that. I actually just saw Elon tweeted some hate on Bill Gates. That's all so
I think it was because of this, right?
Okay, yeah.
Because of this, yeah.
Okay. No,
I mean,
that makes sense.
Yeah, I was gonna say now Elon Musk hates short sellers on Tesla basically. So
yeah. I mean, look, I get not being happy about it, but it's not like it hurts the company, right? And so far, all the short sellers have been proven wrong because Tesla's stock just, won't stop. But
yeah,
it
doesn't. Yeah, it doesn't. It's just it's also Bill Gates. Why all people is you can use this money for other stuff. Why would you short Tesla? And Tesla doing the most important thing for the environment kind of thing. And then you are right? I mean, of course, that battery could be. I mean, at least in a lot of people think that EV is good for at least it's doing something for the environment, right?
No, I don't.
Of course, it's not going to completely solve the issue, but still, you don't want to. It's just back look, right? Now you are against climate change,
right?
Well, Elon said Tesla's doing more than any company to help the climate crisis. I'm like, that's a little bit, and by that I mean a good bit of an exaggeration. Electric cars are definitely an improvement. The total carbon output when you factor in the full production and usage is like a quarter that of a gas car. But I mean, he's also doing stuff like trying to make a tunnel that has cars drive through it instead of just being a rail line, right? Which is, kind of contributing to the whole we need cars everywhere kind of thought process. And we could do a lot more for the climate if we didn't base our cities around cars in the first place. But he's had both Tesla and then the battery stuff he does. He has companies doing good things, so I don't want to hate on him too much, but not the most, right? He's not taking the actions that are ideal for the climate, but he is helping.
Not the most. So who is the most then? If you do have a counterexample to that,
probably companies that are mass producing cheaper solar panels are probably having a much bigger impact on the environment. Because solar power has now basically killed the cost effectiveness of coal plants. And if that shit keeps going on, that might actually save us. So companies that are working on the companies who have been improving and especially improving solar tech and getting that to production, they're mucho importo.
What about even Tesla has a solar city? Did they acquire solar city? So are they not making solar panels?
I know I heard something about their Tesla solar tile roof things, but as far as I know, that hasn't been gotten on any sort of scale, been produced or spread out, right? I'm not, maybe that will become a thing, but there's companies that have helped scale up solar power to be a big, portion.
Gotcha.
Or in growing. So that's one example. And there's probably some other people and groups that are doing other things that I don't know. I mean, there's a ton of companies working on green technology. I was thinking about that as a potential topic in the future, but electric cars are great, but cars in general are very resource inefficient, even if they're, pure electric power that comes only from renewable energy. So,
cool.
Anyway.
So, I mean, Tesla related.
Tesla related. You got anything else Tesla related?
Yeah. Have you heard him try to buy Twitter though?
Yes.
Oh, yeah.
What do you think, Mike? I think Mike has a lot of views about it because you are a power user.
No. I mean, it's just. I mean, I use Twitter just to follow celebrities. So I mean, I like.
Which is
But
celebrities?
I mean,
Taylor
just
Swift? Tay?
I do follow Taylor Swift. Yes, I mean she doesn't tweet very much. It's usually just when she has music coming out. But
Who else?
I mean,
Blackpink.
I do follow Blackpink. Yeah,
Blackpink. Oh yeah, that's right.
the K-pop group. Yeah. So no, yeah. I mean, it's just musicians, like comedians. I mean, it's just yeah. So I mean, Twitter is my like, and I will use Twitter to like trend like Twitter.
Oh, comedian. Hold on. Comedian. Did we talk about the Chris Rock's thing?
Oh,
Like, we
Chris
haven't
Rock.
we haven't talked about it, right?
We have not talked about the slap. Yeah.
So
I feel like we missed it. It's already come and gone, right?
Yeah.
Do we
Yeah, but
need to talk about
I
it?
still want your perspective. You were in the comedy group, right? You guys probably have a big conversation about it, right?
I mean, not really. I mean, honestly, like a lot of people were like, "Oh, it was staged," and it's like, well, it was not staged. Like, it was pretty clear.
That's my first thought. I thought it was staged. I was like, okay, this is probably staged. It's gonna come out, but yeah, apparently
That was a real slap. I'll tell you that.
Yeah, no, it was a real slap, and like obviously, it hasn't done wonders for either of them. So it was probably not staged, but yeah.
Wait, I thought I heard that Chris Rock's like first like comedy performance afterwards was like super booked out.
Oh, really?
Because everyone was like wanted to hear what he had to say, but apparently he just he was like he said something like, I'll address it at some point in the future, but he wanted more time to kind of like think about it before he started making jokes, which is a mature response. Although I think many people were kind of hoping he would start like dropping bombs on Will Smith because it'd be funny, but he's taking the high road.
Yeah, no, I mean, anything, like, I feel like a lot of comedians are a lot of the more respected comedians. Yeah, we'll say like, cause like they'll like, obviously a lot of comedians deal with like depression and like different types of like anxiety and stuff. And like, sometimes they'll talk about like, there's something I'm dealing with that I want to bring on stage, but I want to make sure it's funny first and not just like a rant. Because like in comedy, I think there's like a lot of like there's many schools of thought, but like sometimes there's like a separation between people who like, oh, like I speak truth versus like I want to be like my primary goal is being funny here. Like,
right.
Because some comedians will just like almost like feel like they're doing like a monologue as opposed to like I'm telling jokes. So
the truth.
So,
they thought they want people to hear the truth.
Yeah.
You say.
Yeah.
But they use comedy to like, make it approachable and people actually listen.
Yeah. So, I mean, I think Chris Rock is maybe more of like, and like what if I try to do comedy, it's like, yeah, the truth is maybe secondary to what's funny or what's going to get a laugh. So, so.
Okay. Yeah. I mean, I don't know why, but when you mention truth, it kind of made me remind me of a recent interview of Terry Crews. The big, I think he was a football player before, right? Or something.
Yeah.
Like that.
And he was on Everyone Hates Chris.
Oh, yeah. Oh, really cool. Anyway, so he on his podcast, on his interview, he was talking about something called self-righteousness. Right. So he was talking all about racism and all the other stuff. He says the root to kind of, I think I'm paraphrasing kind of, it's like almost like all like bad things like, evil, the root cause of evil is like righteousness, right? He's like, it's not like you, so when you, something about like being victim, right? So victimology and stuff like that, right? You see people say, oh, I'm poor, so I can say stuff like that and stuff like that. And then it's, oh, I'm right because, self-righteous. And even a lot of like, people committing like big, I guess, back in the day, right? Committing a lot of going to other countries and then try to commit wars and hurt other people, try to murder other people because I'm doing this right because I'm doing this right thing, right? So self-righteousness. Anyway,
The
so
Crusades, yes.
It's more than just like stuff like that. So and that made me think about the truth, right? When we try to tell people truth because you think this is the truth and you think it's the right, so you want to force people in these and stuff like that. So anyway, just something that I haven't thought about before. I was like, okay, yeah, right.
No, I think Terry Crews is probably on the money on about it because most people who do bad things don't think they're bad people, right? There are
Exactly.
some
Yeah.
but most people find a way to kind of justify their actions and some sort of self-righteousness for everything from like a religious crusade to politics to society harmed me, so it's my right to like get back at society, whatever, right? There's all sorts of crazy mental hoops, but it's that feeling of self-righteousness can very easily override, what I would say is a much more a better moral compass, right?
Yeah. Yeah, even right now, like even thinking about, right now a lot of people are like banning like Russian athletes for like competing in like tennis tournaments, right? Recently, it's like it's the right. We're doing it because we believe it's the right thing to do, kind of in a way. Maybe not. It's because sanction. They know no. Okay, anyway, I think I'm stretching a little bit too far. So let's root back to Twitter. Yeah, go ahead, Mike. Continue your Twitter stuff.
Yeah, well, no, so, I use Twitter like I say, I get trending, like the trending topics are like sometimes a good way to be like, okay, this is what people are talking about, like in the news or whatever. So it's like, if it's like, I'm not a person who's like always looking at the news on various, like, CBS, CNN, whatever, Fox, whatever your preferred news sources. Like I'm not necessarily digging through those a ton. So it's like, it's a good way to be like, okay, this is what people are talking about. Like if I'm out and want to like mention something news related, but, yeah. And then I follow celebrities to basically see if, a comedian I like has a new hour or a singer puts out new music or whatever.
That's, yeah. So what do you think of?
Stepping back to Shu's original question on Elon's like proposal of buy, what do y'all think the odds are that it was just a basic pump and dump scheme?
I've seen that as the very high likelihood of what it is, or that's the theory a lot of people have. But I mean, it's entirely possible. But I don't know. So he claims he wants to like buy it and take it private, right?
Yeah.
Yeah. So, and I guess that would be.
He's going to fire all the board members too.
Right. Yeah. Like he's going to say.
Actually, who all the people that are going to make the decision to sell to them.
Yeah. So, I mean, I could see it being a pump and dump type thing, but I don't know. I mean, he's just like, he's become sort of a face of, someone who's like very like against PC, like cancel culture and, and so, I mean, if he were to like, make Twitter, like, I mean, Twitter obviously has some controversy for like, how they enforce policy and what they allow on there and stuff like that, like from both sides. So, I mean, if Elon were to buy it and take it private and make it like, I guess, change that view, I mean, that could be.
I mean, the main thing, changing the view. The main thing he want to buy is because I think one thing he said was a freedom speech, right? It should be a town square thing, kind of thing. And then I don't think it's a pump and dump scheme because the stock didn't really pump, right? Didn't really go up or down, basically. That all in terms of purchase is pretty flat, right?
Well, just because it didn't work doesn't mean that wasn't what he was intending.
Yeah. Also, I think he genuinely actually care about Twitter because he's a power user and then he uses it. I think he's one of the most actually active person on Twitter and the most follower. And then whatever he says on Twitter is always have quite a big influence. And I think he's really like the product too. He has a lot of ideas how to improve stuff, like the edit button and stuff like that. And I think he just want to, So basically, I think I
agree with you that, he probably does really care about Twitter, but it's possible that it's kind of, motivated for more than one reason. But like, he bought a bunch of the stock, right? Then he announced that he would be willing to buy the rest for a higher price. And I think he said something along the lines of, I feel like I remember this, basically like if Twitter denies his like thing, he might be forced to sell his shares or something, which very much follows a pattern of like buy in, use his platform to like up the price and then, get out, which he's done with cryptocurrencies before. So
Yeah, but also he just announced I think he filed with SEC that he secured all the fundings for buying 100% of Twitter, basically.
That's true.
Yeah. And so do you think? So I guess the other question is that how did he run so many companies at the same time? Right?
I guess he must be good at delegating, because
SpaceX, a boring company, Neuralink, and what do you call it? The other stuff, Tesla, of course.
Tesla, don't forget about that one.
Now he wants Twitter, and then what other company and there's other stuff.
What's his satellite company? Starlink or something?
No, that's SpaceX.
SpaceX
Starlink is
the
a product of SpaceX.
internet?
Yeah.
Oh, okay.
Yeah.
It's under
One
SpaceX.
product, yeah. And then the other ones, I think he's doing a little bit with OpenAI. I don't think he's doing much, but yeah, still.
Yeah. I mean, obviously he can't do everything, right? So he must, if nothing else, he must be able to hire good people, and delegate appropriately, because obviously it's impossible for one person to actually take the bulk of running all of those.
Okay. Yeah.
All right.
Anything else? I mean, have you guys anything else you want to rant about? You probably have something like over the week or something that really come to mind. Bothers you? Things you want to share?
Mike, come on, you got something to rant about, right? I'm just going to point this towards you so it doesn't come at me.
All right. So NBA playoffs. No, I mean, I don't know. I mean, I worked. I mean, and basically, I feel like I have been paying a lot of attention to. Yeah, I mean, I've been paying too much attention to sports, probably. So,
okay.
Yeah, I mean, it's basically, I mean, the Celtics are up 3-0 over the Nets. Matt, are you devastated your team is choking?
Oh no.
I mean, if you're a sports fan, which I'm sure ones of listeners are not, and I know you guys aren't, but KD, in that series, Kevin Durant, was supposed to lead the Brooklyn Nets, it was a chance for him to lead a team, and he has not played well, so that's a big story in the sports world. But.
Is Kyrie Irving playing now?
Yeah, he's back playing. Yeah, because
Yeah, go ahead.
Well, I was just gonna say he had a huge first game, and the Celtics stole it at the Celtics won at the end. But I don't know that he's played nearly as well in games 2 and 3. But he had an amazing, he was on fire in the fourth quarter of the first game. But yeah,
who's on Celtics?
Jason Tatum Jason Tatum, Jaylen Brown, Marcus Smart.
Oh, those are just no names.
No, they're big names.
They're not KD big, or LeBron James big.
Okay, yeah, they're not. Yeah, but I mean, they're both I would say at least Tatum and Brown are top 20 NBA players.
Yeah, and there's A-list, like KD, LeBron James, and these are big league players, basically.
Yeah. Right. There's a difference between people who will be famous amongst sports fans and people who are famous amongst everyone, right?
Yeah, that's fair.
That's another level of fame you can't expect everyone to achieve.
Yeah. So, but no, I mean, so the Celtics are definitely a team. The Celtics are a good team, particularly a good defensive team.
Okay.
But yeah,
does defense win championships in basketball?
That has been said. Yes. So
does what?
Defense win championships. That's what they say in football. Well, at least college football. But
yeah,
you know why they say it?
And for football or basketball?
Both.
No, I don't know why.
because defense is boring. Nobody care about defense. That's why they keep saying it. They're not pointing out if anybody's doing it.
Fair enough.
Yeah, I got you saying. Yeah, it's a good philosophy, I think. Yeah, even in investing too. So one of the most important thing is defensive.
What a smooth transition! This professional right here.
Yeah, that's
right. He did it. All right, let's get into your book, Shu.
Yeah,
All
that's
right, all right. Cool. All right. So the book, so it basically called The Most Important Thing. And Howard Marks, I think his memo is actually read by Warren Buffett all the time. So anyway, so he has some good advice on what are the important things in investing. So let's go straight in. The most important thing is second level thinking. Any thoughts? What do you think in investing?
So I'm not 100% sure what second level thinking is, but I'm going to take a guess, which is like, is it like everyone thinks some company A is going to blow up?
Yes.
So let's say Tesla is going to ramp up production 200%, whatever.
Mm-hmm.
So, everyone's buying up Tesla stock. Is the second level thinking like, well, who's supplying Tesla? The companies that are going to supply Tesla and then get big. And then, so you're kind of one step away from like the obvious trend.
Yes. That's one example.
Okay. Is that like it in general? Or, I mean, how is it used more generally?
I think in this book, the author, Howard Marks, he giving example saying like, next stock, like as you say, in the company A, in the Tesla is, doing very well, like very good, people are buying it. So let's buy it, it's good company. So let's buy it, right? And the second level thinking his example is like, oh, since everybody thinking that is good company, that means everybody's buying it. So that means we should not buy it because it's not a good, let's see, it's not good price right now for us buying basically, right?
Mm-hmm.
So, and the other second level thinking usually in terms of like, in other aspects would be your example. Like your example say, oh yeah, maybe we think about other companies that, that's supplying like battery, maybe lithium is a company a good buy right now because it's gonna, in high demand, right? But anyway, he framed it in terms of like, because the market, like the stock market game, like buying it is not really is a like zero sum game, right? So there's winners and losers, right? So if your goal is to achieve above average result. So for example, if you follow like the herd thinking, like okay, company A is good, let's buy it, just first level thinking, you might do okay, you might get average results. But a successful investor want to achieve above average. And by definition, you cannot follow everybody, how everybody thinks you cannot achieve above average result by following average people's thinking, right? So you need to think second level. And does it make sense? Any thoughts?
It does make sense.
It does make sense. Yeah.
Yeah, so it's basically like, like, yeah. So you need to, another way he basically phrase it concisely, like to second level thinking is basically think different and better. So you have to think different from like first level thinkers or this, but you also, your thinking need to be better in a way too. So if you can be better, you can really beat other people basically.
So one I guess question about this or kind of angle, like, I mean, if the average thinker is doing something and they're right, wouldn't you often lose not doing what the average thinker is doing? In which case, what kind of working towards is, what are you really looking is for when the mainstream is wrong? Is that what you're trying to identify specifically? And say like, well, they're right about this, but it's already been bought up. So we've kind of missed, like there's a difference between like a missed opportunity versus like, because you weren't like on one of the front runners versus like, this is not like, this is the market's gone wrong. People are being dumb. I'm going to like profit off that.
Yeah, exactly. Yeah. So a lot of times, yes, sometimes. So this kind of into the other important things, right? So a lot of times because the market is kind of going a cycle, right? So, so you can, in good times, right now, like before 2020, right? Right now, everybody, even right now, a year ago, like the stock market in a bull market, right? So if you just follow the trend, follow the market, or follow what average people are doing. Everybody is really smart. Everybody is smart, looks very smart in like bull market, right? Because you can't be wrong, right? You just buying, you're gonna go up, right? It doesn't matter. It's like what you do, right? It's in down cycles, like bear markets, when the market switches, then you know who's doing good, who's actually making good decisions, who's a good investor and stuff like that, right? So yeah, and also I think one of the points that when the money is made, now if you average, because you don't want to average, even if right now it's even if the average buyers investors are right, if you buy in, you still get average results, right? Because you're just basically doing what everybody's doing, right? So by definition, you can beat them if you just do what they are doing. So so that's why you need to identify, when, as you said, identify when the market when everybody is wrong, right? So you want to think different but better, right, in a way. So if you're not, you can think different. Anyway. So I think
the better is very important because you can't beat the average thinker by doing what everyone else is doing, but you can definitely do worse than average by doing other things. So
yeah, exactly.
You got to be careful. I guess it's kind of, is it just, in some ways, is that just basically like we're going to take a high risk for a high reward?
Oh man, you're going to another most important thing now.
Oh my gosh.
Actually, let me just go into it since you're talking about high reward. This is actually one thing I learned. So high risk, high reward, actually. So the most important thing is understanding risk, right? So you're talking about high risk, high reward. One thing I learned from the book is if you stretch out the line about the risk, if you have what they call the X and Y axis, right? An X is the risk, reward, right? The return is the Y axis. You basically draw a straight line, like up and down, like almost like what do you call that? Like a straight line from X to Y. Linear is going up, right? Up to the right.
Yeah.
So it's like high risk or high reward, high risk, high reward. So if you purely making decision by that graph, you say, oh, okay, let me just seek out the risky assets to buy, right? Right. And that's what net graphs tell you basically, right? And that's what you said earlier. Why don't you so that does that mean you just do buy high risk, high reward stuff, like strategy, right? And then one thing he pointed out actually is it's a bad strategy. It's a terrible strategy because net graph is misleading, right? It's not plotting out the variance, the probability of the Gaussian distribution around the high risk area. So basically, in the book, he actually overlay that graph with a probability distribution to make it actually more accurate, right? So if you go to the higher risk area, you see even though the graph is high reward, but around that reward, you actually have a Gaussian distribution of the probability, because your risk can basically increase a lot, right? The variation in your probability of return get the probability became super big, right? So anyway, so that's one thing. So yeah, so that's one thing that he talked about there. That actually made me think a little bit different about risk, right? So yeah, high risk, high reward is not good, basically.
Yeah.
Yeah. Any thoughts on that?
I mean, everyone wants low risk, high reward, right?
Exactly.
But okay, what's the secret, right? Because a lot of people will say, well, if you just bought Vanguard 20 years ago and put all your money into some big index fund, which is like the generic case of following the herd, the safe average play, right? You came out pretty good, so, and I agree with the concept of you can go different, try to, deviate from market trends and try to beat it. But if that's inherently risky, right? So what can you do that is both away from the average and low risk?
Well, you need to understand risk. You need to understand risk.
All right, come on, give us the secrets. Let's go.
There's no secret. You just you need to do the homework to understand what risk is.
When the risk is appropriate or not.
Yeah. So one thing is understand risk coming to an end. What's the definition of risk? What's your thoughts?
In this context, is it just...
investing in stock market. Yeah.
Okay, well, in this context, is risk like the amount of money you have to invest and the likelihood that it goes away? Or
What about you, Matt?
Yeah, I was thinking something like the probability you lose money on an investment, something like that.
Yeah, you guys are already good. You guys are already good. And that's what his definition. I think a lot of in the market, a lot of like when talking about, I think a lot of, and it's back in the days, people are always talking about volatility is basically risk. Like a lot of people just like equate volatility with risk, right? Which is very different, right? Yeah. So, so risk is also like understanding like how, like I guess the price of value of stuff, right? So if you, anyway, actually, let me go on to other stuff that is the risk thing to do.
Yeah, well, I was just gonna say, like, very quickly, like, I'm thinking about, like, so risk in this context, like, if you invested in Bitcoin, like, 10 years ago, like, Bitcoin has always been an asset that's, like, very high volatility. And, like, I feel like now it is, like, a risky proposition because it's, like, very expensive, like, and it's still bouncing up. And, like, there's an opportunity to lose a lot of money and you need to invest a lot to gain a lot of money. But back, if you invested in it, like, 10 years ago, like, I would say that's, like, low risk because it's, like, you could invest a little and it had the potential to, like, gain tons of it. Like, a pizza is worth $100 million now. So, or whatever it is. So, yeah. So I guess it's like, that is, I guess, investing in something different and it being low risk. So.
Can you repeat what you say?
So like, well,
talking about Bitcoin?
Yeah. Like Bitcoin 10 years ago, I guess, is investing in something different. Like it was not something people, like a ton of people were, or it may, I mean, I don't actually know how many people were investing in Bitcoin 10 years ago, but like, I feel like that may have been something different that you could have invested in that had a low risk, but high reward type potential.
So in that case, risk, I mean, I think it'd be fair to say, early on before what we know, there was a high chance of your Bitcoin investment going,
of course,
getting burned, but because it's low, what you're basically saying is you're just going to make sure you got to consider how much you got to invest too, right? Like the total amount, put in, because if it's not a lot of money, even if it's a big gamble, you just say whatever, like I can afford to lose that easily, so it's low risk.
Exactly. Yeah. It's like you can, as long as you're putting it like, I mean, there's like, I don't know much about it, but there's this notion of like penny stocks or whatever, where it's like you can put in like, as long as you're putting in the small amount required to like, purchase like a handful, like there's the potential for high reward. And it's like, yeah, if you lose, it's like, oh, well, like that isn't that much anyway. So
same with like people who buy options like that are way out of the money, right? And then like most of the time they just spent like $20 and got nothing, but maybe the stock blows up and they get a ton of money.
Yeah, it's sort of like gambling, right? I mean, but just with maybe better odds. Like, so it's like you can gamble intelligently in a way. Like,
so what's the mathematical way to say this? So let's pretend we knew the probability of you losing money or whatever. Like, would you just say, if you could calculate the expected value of your return, like you can imagine like two stocks could have the same expected value. Like on average, they will both give you 10% returns, but one, the almost like 95% of the time is going to give you between like 20 and 2% returns. And the other, it could give you 50%. You could lose everything, but the expected value is the same, right? So, I mean, if you somehow see the future, how would you actually calculate risk?
Well, the problem is that I think the main thing is that you can see in the future. It's a futile thing to do to predict the future, right? To do the expected value kind of thing, right?
Well, I guess what I was saying is even expected value isn't like an adequate measure of risk, right? So if we go beyond, like we can make general statements, right? But like, how do you get to like really calculating risk?
calculating, yeah, I would say that's one thing to do is expected value, right? The one way to do it, and that's one tool that you can use, but doesn't mean you can just based on that, you need to make decision based on that. You need to understand what other scenario that could happen, like what's the worst case scenario. Even worst case scenario, even if you do worst case scenario, you might become like too timid about putting money, right? So stuff like that. So I mean, I'm not sure like how to. I mean, the book of course didn't really talk about like, what's the like how do you really calculate like risk specifically, right? But it's about understanding what are the possible things that could happen, and then try to avoid, I guess, the risk of ruin, right? Like you lose everything. Since you are so that's being, you probably don't want to put all your money into one basket, basically, right? I think he gave a story about one day a gambler like heard there's a race, a single horse, like just one horse race. So he put all the money into it. Oh, and this horse is gonna win because it's only one single horse race. But during the middle of the race, the horse basically jumped over the fence and then ran away. So he lose all the money. So right, anything, and it's like there's a lot of risks you don't think about when you basically making decisions, basically. So you need to I guess protect the downside. Make sure you don't put all. The risk is lose the biggest risk is lose what you put in, right? So if you can't afford to put everything in there, just don't put everything in there, And also, at the same time, then Mike say, like, if you back in the day, if you put like $3 into Bitcoin, it's like, it's small loss, right? So it's no big deal. So yeah. Mm-hmm. So that's why you don't like, stuff like that. So anyway, so.
All right. So what is the other most important thing?
Let's go back to, we talked about race already. So let's go back to the second, not a second, but just number 2. So the most important thing is understand market efficiency, right? So have you guys heard about the efficient market hypothesis?
I've definitely heard the term.
Yeah, I think, I thought I heard you, Matt, you talked about it before. No?
Probably. I mean.
So what does that? Yeah, go ahead.
I see. I'm trying to remember. I don't know exactly what it's referring to specifically because I feel like there's different ways you can interpret the market being efficient, right?
Mm-hmm.
Like within stocks, I mean, a lot of it is just that, like isn't it related to basically the buy-sell spread? Like because there's a difference for any stock. There's like a difference between what people are buying and selling at, right? And markets are considered efficient when they are able to close that price, get them close together.
Mm.
And if that price is far spread out, like maybe not a lot of people are trading on something, that's considered an inefficiency. But there's like a lot of context for like, I guess for what's efficient, right? So I don't remember. Yeah, I don't remember what the term.
From my understanding, I think basically efficient market hypothesis basically says, of course, the market is efficient, which means that all the price, like the stock's price is already, I think that's basically what you say kind of, but basically everything like price right now, how price, like when the price of stock is the actual price of the stock kind of thing. Like everybody, like everything's pricing, like everything like investor expectations and other stuff are already priced in, right? So it's like the price of the stock is efficient. This is the right price of the stock kind of thing. I'm not sure if we say right price, but basically pricing all the variables into the price, basically, right?
Right, because sometimes people try to be like, well, if you consider that. Sometimes people are like, if you consider these other things, it should be higher or lower. But what you're saying is, no, those stock prices already consider those things.
Yeah, and investor psychology, like on a state of affairs, like whatever in the world, stuff like that. Is this price is the price. Is like the market is efficient because it adjusts itself based on all these variables, basically, right?
Mm-hmm.
Yeah. So do you think that's a correct hypothesis?
Most of the time.
Mm-hmm.
But all of the time?
Yeah. So one thing he pointed out is So I'm not even gonna say it's most of the time actually, because but anyway, his point is that the whole reason is he had the hypothesis has to be wrong, because if there's no inefficient in the market, investors can't really do better than average return, right? You can't really they cannot get higher than average return if the market is efficient, basically. That's what his point. And then, so in other way, if you want to make higher than average return, basically you need to look for an inefficiency in the market, basically.
But
But
by correcting those inefficiencies and making money, aren't you fixing them and making the market more efficient, right? When you do that?
yeah, probably. So that's why investing rules people tend one strategy. That's why investing strategies doesn't work all the time, because the market kind of adapts itself. Now, for example, you say, one strategy is to buy high, sell low. If everybody adapts it, and then then there might not be a good strategy ever. Right?
Buy high, sell low.
Buy low, sell high.
I'm not listening to anything Shu's saying anymore. Just cutting this off.
If everybody adapts Warren Buffett's rules of when everybody's greedy, you want to avoid the stock when sell when everybody's greedy and buy when everybody's scared and stuff like that. If everybody adopts that rule on that strategy, that might not be a good strategy anymore, right? So that's why even though the wisdom of investing doesn't apply all the time, right? Yeah. So anyway, yeah. So yeah, because the market kind of incorporates that as well. But it's efficient in some way, but that's why there's some limitations of where it's not inefficient. So that's where you can make money, basically. So, yeah. All right. So the next most important thing is value. Any thoughts?
That's obviously not true, all right? How old is this book? Is he going to argue the underlying value of a stock is important? It's 2022. We've moved beyond that sort of first level thinking, right? That's, I'm kidding, but.
So, to be fair, I think he came from a school of something called value investing. That's what Warren Buffett and Charlie Munger are doing, right? Value investing. So, I think you are right. You are, but it depends on how you define value, right? So there's something called just value, fundamental value. The other is growth, right? You take future into account, like Tesla. People are not really buying Tesla, is the value because it has current value. It's basically betting that its future is going to make business, right? So, but first to start, you need to start somewhere. You need to start with the fundamental value, basically. So one of the most important things is value, because if you don't have that to start, you just basically follow the herd, basically, right? It's hard. It'll be harder for you to make decisions if you don't really have a good understanding what's the value of the current value of at least the fundamental value of the stock, right? A company.
Right. So I guess second order thinking in it is at least in part just being better at recognizing value than other people.
Yeah. But the problem with value investing is boring kind of thing. It's kind of boring. I mean, that's why I don't look at the stock and try to calculate the value, fundamental value. I just want to, what's the high right now. But since I'm not really managing my money, I'm also playing with small monies, like a couple of dollars, it's not small risk, right? So if maybe when I became a billionaire or something, I worry about that.
When, not if. You heard it here first. When.
Yeah,
it is guaranteed.
Exactly. That's why I'm reading all these books, So yeah, understand value is a good thing. So now we come to the next most important thing is the relationship between price and value, which is, I think, kind of obvious, right? So. Any thoughts on that? Do we need to go more in depth into the price and value?
I mean, that's just market efficiency, right? Same thing.
Yeah.
Right? Like the difference between, how accurate is the market actually pricing? Price discovery is the term they use, right? How accurate is the market finding the real value / price of something?
Cool. Now, since we talked about risk before, the other most important thing is to recognizing risk. Let me let me take a look at the notes that I had, if I can explain this correctly. If not, we can just skip to the next one. Yeah. Anyway, so yeah, and there's so many stuff I read that a lot of times I need to read a second time. I haven't had a chance to read a second time, but for people that who are interested in going deeper, you just read a book. All right. Alan, mostly, so now when it comes to, I think we'll go back to the risk in the later probably, because the risk is one of the very most important thing in investing actually, because the whole investing thing is about uncertainty, right? And risk is, everything is uncertain, and risk is definitely because of uncertainty. You can't predict the future. So, so the most important thing, the next most important thing is being attentive to cycles. What do you think?
Yeah, I mean, they always talk about the market sort of, going sort of the boom and bust type cycles, and part of the, I guess part of the goal of the the government and different agencies is to sort of limit the degree to which those cycles like go very high and very low. So, I mean, if you're an investor and you recognize, okay, the market's on the rise, or basically you can sell when it gets to sort of the high point, or if you recognize, okay, we just had an explosion here and this is sort of the basement, then you can buy and assume that it's going to go back up. So it's just tuning into that.
I feel like everyone says that, or right, like it's understood. Like everyone knows there's cycles, things go up and down, but I guess no one knows when the cycles, like there's no way to know when a cycle's like starting or ending, or like, how long it's going to last, what's the ceiling, what's the floor. Cause like, I did some time series forecasting, right, for my dissertation. And what's interesting there is seasonality is something different than like cycles in that sort of literature. Seasonality is is a cycle, as we would normally say, but it has like a regular period and like a predictable response. But like you can have cycles that aren't seasonal. And so you can recognize that these cycles exist, but they're very hard to predict because, well, if they don't have a known period or expected, highs or lows, even if you can tell this happens, right? How do you, gather, understand a trend and forecast that forward? So, it's tough, right? Because people always saying like, in hindsight, we can look, it's one of those things in hindsight, you look at the price graph and you're like, oh, it shot up, and then you just need to sell when you shot up, right? But where you don't actually have any idea where cycle's going to end and go back down.
Yeah, I think no one can really predict time the market, basically, right? Cycle is now you try to time the market, which is probably a very bad strategy anyways. No one can really do it consistently.
Well, what they say is time in the market beats timing the market, right? You might have told me that, Shiu.
I don't think so. Yeah, maybe use Warren Buffett.
So how does being attentive to cycles help then, right? Like
I don't think it's I think it's not timing. It's not that you try to time the market. I think it's try to be aware that other people forgetting the cycles, basically. Right? So I think one thing you point out is be aware of where you are in the cycle right now. So you try to pay attention, be more conservative, right? And also at the same time, paying attention to other people, what other people are saying. So a lot of people, I think, forget about cycles. His point is that a lot of people forget about the cycles, basically. And they always say, oh, this time is different, right? When you hear that, now you need to be very afraid. Actually, I think I did hear it about too. Like, inevitably, when you think about, okay, looks like the Bitcoin this time might be different, right? Like we went through the tech bubble, so I was like, okay, if everybody's aware of the tech bubble, right, know about it, like on a Great Depression or something. That means, people should be smart now. Like they should be aware of this thing, right? Mm-hmm. But the problem is that people don't don't pay attention to history enough, and then they always say, "Oh, this time is different." That's when you need to like start selling and then be more conservative and then wait for an opportunity that when so that's the time you can see, okay, that people are getting too excited about the market, and maybe it's a good time to be way more be afraid right now, basically, right? So anyway, when you hear these 4 words, be very, very afraid. That's what he says. All right. So on the cycle thing, and then he's next. Then the most important thing is be aware of the pendulum, right? So in the cycle, and the pendulums will be different, right? What do you think? Yeah. So I say pendulum is like it's going one extreme to the other extreme, right? And then one thing he mentioned one extreme is that they don't really, when they go to one extreme, they don't really stay in that one extreme for a long time. They really swing back like very fast, right? Cycle is kind of go through cycle kind of slowly maybe, but pendulum like oftentimes is related to cycle, but it's a little bit different. It's basically a different way of looking at things, right? What do you think about that?
Are you saying pendulums how people behave, not like the market?
It's how the market behaves.
It's how the market behaves still?
Which fundamental because how human behave.
Right.
Right?
Yeah.
Yeah.
I don't know. I don't understand the difference from the cycle part.
Okay, all right.
Sorry. I'm guessing Mike doesn't either based on the look on his face.
Yeah, I think we don't really get into it. It's pretty related to cycle. It's just that for example, when market crashes, right?
Mm-hmm.
It recovers actually very fast, right? Just look at like, I think that's what his point. It's like going from one string to the other string. Just look at the March 20s, like the February, March 20s, right? When the COVID hit, right? The market basically crashes. But in 1 week, a couple of weeks later, it recovers again. Like, and it swings actually into the really all-time high, right?
Well, this is, in my opinion, the absolute best investment strategy is very closely connected with this, which is market crashes are just like the best time to make money for free.
Exactly.
Because the market crashes, right? We have two possibilities going forward in the future. It's going to return, or like the United States is going to collapse and your money's going to be worthless anyway. So either way, every time the market crashes, you should just be shoving money in. I remember when 2008 happened, right? Like the housing bubble caused like the great, recession, right? And I remember thinking in like high school, like, this sucks because I don't have any money, but this would be so easy to make. And my dad did have money, and he did put like a lot of his more money into the stock market, and he made a bunch off of it. But like when COVID happened, that's when I finally was like, oh, I gotta like, not a ton, but I'm like, I gotta put some money on this. And that's like when I got my Robinhood account. And like, most of the other things I've done have not, maybe a little bit, but like not much. But then like a few things like buying some plane, Boeing and Delta, after COVID got big, right? That's like this is going to be like the easiest money I've ever made, right? Like, prices go.
Did it turn out good for you?
Yeah. I mean, they still haven't, last I checked, because I don't actually look at it that often, they still haven't returned to their full original price, but like they went up from like the COVID lows by a good bit. So I was like, that's just money.
Okay. So what was your return?
I would have to, you want me to pull up my Robin?
50% or 100%?
I don't think those weren't crossing 100%. The only thing I've ever gone past 100% was this solar ETF I bought when Trump was president, before Biden got elected. And I kicked myself for not putting more on that.
You didn't buy AMC?
I did not buy AMC.
You told me to buy AMC at that time. I remember it's right before during the crash, and I actually bought some, and then it probably shot up to like. At one point, it was like almost shot up like to maybe a few 100%.
What did you sell it?
No.
Well, it's still doing all right.
Because I didn't put that much money into it, so I didn't really know. No selling is like, what's the point? I'm lost few dollars.
Well, AMC was another company, right? Like flying, it's like an industry that was hit hard. And it's like, well, you just have to say, what's the risk of this whole like industry / like the major companies in this industry fall off, like get, get destroyed. I didn't think it was a high risk of that happening. So I would consider those very similar investments. Although AMC was a little, I mean, AMC got caught up with the GameStop stuff. So I feel like those peak returns, when you were like, you texted me, you were like, you were right about buying AMC. I'm like, I can't claim credit for this. This is a very strange phenomenon that increased your potential, returns way more than should have happened. But yeah, anyway, so that's the pendulum thing. Market crashes, easiest money, right? So when the market crashes, like I guess it sucks if you're already like fully in, like if you have all your money in stocks already, you can't do anything, right? Then you're screwed. But if you keep stuff out and, wait for the market to crash. I mean, you can call that timing the market because it is, but it's, it's reliable money when it happens.
But you're waiting for it basically, but
yeah.
So anyway, cool. All right, let's move on to next. The most important thing is combating negative influences. Actually, since we are running out of time, I think, basically, negative influence, basically, just be aware of the psychology that influence other people. So the first emotion that serve to understand is the desire for money and stuff like that. Anyway, just be aware of the negative influence on other people's emotions. Like one is influence, like ego, envy. Anyway, I think I gotta skip this one because we are running out of time. More time people to read the book. I think one thing I'll go into is being the most important thing is contrarianism. Any thoughts?
Is it good
fits
or
you
bad?
perfectly, sure.
Well, I mean, if you're trying to buck away from the, beat the average, right? You got to be contrarian to some degree, yeah.
Yeah. I think one thing I want to know about contrarianism is that most people understand contrarian just be different, right? You think different from other people, and I think related to the first one, contrarianism actually means had to be different and better, different and better, right? You still need to be better. You need to be different, maybe, contrarian maybe need to be different and right, actually, right? You need to be different, but you need to be right. If you're wrong, it's like, what are you doing?
Yeah, well, I mean, I think like almost all of these boil down to like the common wisdom can do like, like the common wisdom is like, basically two heads is better than one, or like, there's many studies showing like sort of the group consensus is often right, but the group consensus is not perfect. So basically it's finding where the group consensus is wrong. Like that's like what the ideal thing here is basically just like 80 to 90% of people are going this way. If, and 80 to 90 say, whatever, 80 to 90% of the time they're right, or some high percentage of the time they're right. So it's just, but it's like, if everyone is like sort of, if 80 to 90% is right, then that's sort of your minimal gains, right? Like that's where you might make a little bit of money, but you're not going to make a lot. It's finding the 10% of the time where those 80 to 90 are wrong, and then you be right there. And then you can, as you said, it's a zero sum game. So you're taking money from 80 to 90% of people.
Yeah.
Well, a minor comment. Yeah. Dividends make stocks not quite 0%, it's zero sum, right?
That's fair. Yeah.
Ignoring dividends, because who does dividends investing these days, right?
Yeah.
It's tricky because there's something special about the stock market is like, just because you're right doesn't mean you make money, because you only make treating it as zero sum. You only make money when someone else agrees you're right and buys what you have. So, because there's been plenty of people who are like, the market's being irrational, the market's wrong, they're misvaluing XYZ, and then they lose money, and they continue to lose money as they yell, the market is being irrational, right? And so you could say the market's wrong all day long, but if no one's agreeing with you, if everyone's going against you, you might still just lose all your money.
Exactly. Yeah, and that's
so
a very
it's
good point.
It's a tricky game.
Yeah. So just like Bitcoin, right? Is like a lot of people like against Bitcoin could still be right, but the market is not. It's like still going up, right? So it's not. So it's very hard to like. It's also like one psychologist like is very hard for you to hold on to your belief, to your independent. It takes a lot of courage to hold on, not to buy into Bitcoin when everybody is buying it and these prices keep going up, right? And one quote is like, I think hold on, something about quote about, hold on, for. Anyway, so basically, I think I can't find a quote. So basically, the quote is like, what smart people do in the beginning, every fool does in the end, right? Anyway, so it's because a lot of people are just like piling in because people are just, even though you believe you're right, and then take a long time, and then you just like capitulate and just follow what other people are doing, basically, right? You're not being contrarian enough, I guess, independent. But yeah, and there's a lot of suffering, the pain and sufferings. You need really hold on to your belief, independent belief, basically, right? Anyway, yeah, and it's so
only vaguely related, but I want to interject with a fun anecdote now.
Go ahead.
Have y'all heard about the price of the first tweet NFT?
Yes.
And it lost 99% of its value when the guy tried to resell it. Did he ever sell it? Actually sell it, or did he just pull it off? Because I think he was talking about just like not, right? Because he's like, well, this would be like losing all my money.
Mm-hmm.
But I'm like, oof. Who could have guessed? Who would have thought that an NFT of a tweet might not actually be worth millions of dollars? That's shocking.
What's the first tweet? I mean, that could still be a big decision. I mean, good decision, right decision, because you didn't know, right? In the future, maybe it's going to be worth a lot more.
It's true. NFTs, maybe they'll spike back up again.
Yeah.
But anyway, we've talked about NFTs before.
Actually, right now might be a good time to get into NFT because then the market is cooling. So maybe the price is maybe more fair now.
It's better than it was.
Yeah.
I wouldn't. I wouldn't. That's all I'll say.
All right. You can be contrarian and be different and better.
This one's it's a pretty good split, right? Because you got like the people who are hyping it, but there was always a good chunk of people who are like, this is a scam or stupid. So there was never a clear consensus, I felt like, of like from the overly online communities that I hear things from. But
yeah, actually, that's kind of one of my motivation about reading this book is to try how basically like the last 40, try to see how people, when they learn from the past 30, 40 years of investing. Because they, so I can maybe apply these to now what's happening in the crypto space, right? So I have these fundamentals so I can make better decisions, hopefully, Anyway,
a lot of people in the crypto space didn't come from like traditional investing, right?
Yeah, exactly. So I mean, investing have been, so people must have some good lessons, and then these are kind of some of them point that hopefully I can apply. So now basically there are total most important things, and then two things I want to go over is the most important thing is appreciating the role of luck, right? So I think, what do you think?
Yes.
Right. All right. I'm going to expand upon this a little bit more than Mike, because I saw an interesting video that I think is relevant for this. Okay.
Yeah.
So the guy tried 2 investment strategies. One, are you familiar with Wall Street Bets, the subreddit where people make terrible investments? So one, he made an algorithm that sort of picked stocks and invested based on Wall Street Bets. So he would look at like when people mentioned like a ticker and do a sentiment analysis on like the most upvoted comments and say, oh, people are talking positively about this, I'll buy it. People are talking negatively about this, I'll now sell it, whatever. And he compared this against a goldfish. He had a camera pointed at a goldfish tank, and whether it was on the left or right side, it would choose a stock to buy, based on it spent more time on which half of the tank. And I bet you can guess the result of the video about which strategy gave higher returns. It was, of course, the goldfish. So, I think that's related to what you just said. The most important thing is luck.
Did the goldfish die?
No, he bought what he did. The goldfish made money. The Wall Street's Bet cinnamon analysis lost money. And then he went spend like the several $100s the goldfish made on like really nice fish tank and stuff, like new parts and treats and stuff for the fish, because the fish earned it. So that was his fish's money.
Did you remember the hamster thing we talked about a while ago? The hamster trader?
No, hamster trader. I forget that, but I know the monkey trader is a very classic,
and then the hamster we talk about. You actually on Twitter. And then he has a Twitter account. Like trading stocks, right, going left and right, and he passed away sadly. So the internet was really sad because he was a very good trader, just based on like which way it goes basically. And then the monkey is another good example of research that done. Just monkeys. Randomly throwing darts dig a lot better than average.
To be fair, I would expect Wall Street's bets. I feel like looking at what Wall Street's bets suggest and doing the opposite is probably a reliable strategy to make money. But
so one thing I think the main thing is when you choose financial advisors or something listen to other people's advice, a lot of money managers, you need to basically look wider. Long time horizon, right? Because it's very easy for someone to be right to make a lot of money or bet a company and then he was able to make a lot of money in one instant in time, right? Maybe you are early investor in Google and then but you make that bet and then you win out big. Doesn't mean you are a good investor, right? Because it's hard to do it consistently, basically over time. So if you can do one, go ahead.
I was going to say, is this a lot like the Survivor?
Survivor bias kind of thing.
Survivor
a little
bias,
bit, yeah.
Like if 1,000 people say they're a genius investor and put all their money on something and 10 of 990 lose everything, 10 have their companies blow up, and then they say, look at me, I'm a successful, really smart investor, but they could have just rolled the dice and happened to be the ones that got lucky, right?
So this come back to me, role of luck and then stuff like so another important thing I think we mentioned before is for example, my decision, you told me to buy AMC, right? And I bought it and I say you are right. But the result is good. Doesn't mean your decision is right? Decision was good. So then that's one thing that keep emphasizing basically you make a decision, a lot of people just evaluate a decision based on the outcome, right? Which is kind of not the right thing to do. You could make a good decision and the outcome could still be bad. Doesn't mean the decision is bad, right? I think we talked about that before many times. So
speaking of bad decisions, not selling that AMC stock when it hit $40 was a bad decision.
Yes, it was. I think it have gone to 50 or maybe, I don't know.
It did. It went higher than that. But you should have sold.
I was lazy. I was just following Warren Buffett, just hold long term, which is not good strategy. So so now that's why I'm reading this book so I can make better decisions. That's right. So
this is probably in general, I would assume if your stock price goes up 10x to just go, especially if nothing like special is happening with the company. I would say just take your gains and sell. And if you miss gains, that's okay.
Yeah. Even if you don't want to sell all, maybe sell 50% of it.
Yeah. Yeah.
That's something I should have. So that's
what you
didn't give me that advice. That's why I messed up.
No, it's greed. I mean, it's like you always think it can go higher, but I don't know. It's recognizing cycles because I should have sold Doge earlier.
What's
well, now you learn.
These days? I haven't.
Now you learn.
At 13 cents, and it was at 75 or something.
Now you learn, and it's better to lose honest money right now when you have more money in the game later when you're a billionaire.
Yeah, that's true. Yes, when I'm a billionaire.
So talking about luck, actually.
Bitcoin,
talking about
10K.
Yeah, exactly.
Sorry. Go
so talking about luck, I want to go back to Elon Musk. Actually, it's so a lot of businessmen, right? He said, okay, he did it once and he's good, and then but one thing about should we bet again shorting? Should we shorting Tesla or any other stuff? Should you bet against Elon Musk, right? The answer for now at least is no, because he had done everything consistently good, right? Like one's Tesla, SpaceX, going to Mars, and then the other companies, and so if Twitter get into his manage, it's very likely that he's gonna do a very good job because of his, past performance consistently. So anyway,
I will give you that, and I think you're right. Like he's made, several companies he's led have been successful, but what I would say is when people short Tesla, I don't think most of them think Tesla is like a bad company or it's gonna like have problems.
Oh, it's just overpriced.
I think it's just they believe they are, the market's being inefficient. They have a better valuation.
This makes sense, yeah.
And once the market, becomes rational again or things get fixed, they'll make money, right?
Mm-hmm.
But, I feel like Tesla stock's one of the instances of people shake their fists and say the market's wrong while they continue to lose money. Although, the stock's like stopped going up like crazy, but it still stays like high, right? It hasn't actually like fallen down to what would be a normal price for a company with that sort of revenue.
I think one thing I worry about that is the Tesla and SpaceX seems to have a big risk, right? Which is called the one man risk, right? What happens if like
Elon dies?
Yeah, and then what happens to the company, right? So then because if he's a single person that actually make all these good decisions, that make the company good, I mean when he's gone, the company are very likely to basically crash, right? So
I mean, that's interesting. I feel like at this point, I feel like Tesla should be okay without Elon, right? Like, is there that much they have to do besides just continue to increase production? Their cars are popular. People want to buy them. I mean, I guess they got to continue developing in the future, right? Like they can't just sit on the same car forever, but like Elon's not in there trying to engineer the next better Tesla, right? Like they have the brand name, maybe in decades it could fall off, but mostly I think the company could coast and just continue to grow even without, the sort of Steve Jobs of cars or whatever.
Yeah. Anyway, that's just something I was thinking about.
I think Apple's a good case of that, right? Because like Steve Jobs sort of one man it seemed like the story is Steve Jobs sort of one man led Apple to huge success, but he's gone and Apple's still doing fine, right? Like I feel like once you get something established enough, it's kind of like, does it need it? But maybe some of the other newer companies like SpaceX, maybe that's not as established as Tesla. Like maybe that would have problems. I don't know. Okay. All I know is if Tesla dropped like 50% after Elon died, I would strongly look at buying it personally.
Yeah. Cool.
All right.
Besides then, the last most important thing is just to put everything together.
Yeah. Easier said than done.
Yeah.
Particularly the luck part.
Yeah.
Anyway, I'm just going to be hoping, for that next big market crash, right? I'm just kidding. Don't actually hope for that. But if it happens,
probably soon.
I don't know. Maybe.
I think
maybe a little one, but like a big one. I don't know. People say the housing's a bubble, but I don't think much of one. So.
Yeah, just pay attention when people say this is different, this time different. That's when you need to be afraid. Right? Have you guys heard anything like that? People are saying this time different.
Not that
maybe you are saying it yourself.
Not that I can recall. Well, I've said it about the housing prices, but so maybe it is a housing bubble.
You say this time different?
Prices, well, some people are like, this is a housing bubble, like, oh wait, right? Like prices are out of control. It's going to crash. And I don't think it's the same as 08 because I think the fundamental cause of the prices are a shortage, but we've talked about housing before.
Yeah.
But is that this time it's different, or is there actually something different just happening, right?
Yeah. Cool.
I'll keep an eye out though.
All right.
All right.
That's a wrap.
Junto Club.